the mistrust that people have for the big establishment entities, and anyhow, it leads back to the financial crisis that's coming, because if people don't trust the currency, they tend to swap out of it as soon as they get some currency, and they buy real stuff. So gold, silver, farmland, oil wells, uranium mines, all of these things that governments can't just create more out of thin air, those things are going up, and they're going up dramatically. So we're seeing bull markets in the commodity space now. And a big part of that is that we just don't trust our bond funds and our bank stocks and our cash anymore. We got to do something with it. So we're looking at things that governments cannot inflate away.
Spot gold reached $3,418.14 per troy ounce on Thursday, nearing its June 13th all-time high of $3,448.50. The metal gained over 3% from last week's one-month low of $3,311.80, rising ahead of employment data that showed the U.S. labor market to be weaker than expected. Economic concerns have driven gold's 30% year-to-date surge. Despite gold's strong performance in recent years, mining stocks had lagged until recently. John Rubino, a former founder of dollarcollapse.com and now a Substack platform operator, credits the rebound to gold's rise to $1,000 per ounce over the past year, which has boosted miner revenues by roughly 30% per ounce. Higher cash flows are fueling aggressive merger activity, with smaller companies likely to meet their takeover targets. This recent rally extends gold's impressive long-term performance, with prices rising by over 90% in the past 5 years. The World Gold Council's latest report shows the precious metal gained 26% against the dollar in the first half of the year, outperforming nearly all other major asset classes. Global demand remains robust as investors and central banks continue purchasing safe haven assets. As Rubino mentions, strong investor demand and central bank purchases reaffirm gold as a reliable store of value. Monetary policy developments have created supportive conditions for gold. While the Federal Reserve has kept interest rates unchanged, the European Central Bank has cut rates 8 times since June 2024. These ECB rate reductions have strengthened gold's appeal globally, as the metal typically performs well when competing investments, such as bonds, offer lower yields. Since gold provides no regular income payments, it becomes more attractive relative to yield-bearing assets when interest rates decline. Rubino believes the gold market is entering its strongest phase since 2015, offering significant potential returns for investors after years of patience. The convergence of economic uncertainty, accommodative monetary policy from major central banks, and sustained institutional demand has created favorable conditions for continued gold appreciation. This video examines gold's sustained upward momentum and bullish long-term outlook, exploring its price movements and key drivers over the past few years. Subscribe for weekly, data-driven insights that support our in-depth market analysis.
Gold has had a great couple of years, but the mining stocks, in other words, the whole ecosystem of gold-related equities that we can invest in, hadn't really kept up with gold for the longest time. People were getting really frustrated. When are the miners going to take off like they're supposed to? And that finally started to happen just lately. And one of the reasons that it's happening is that, gold is up $1,000 an ounce over the past 12 months. And that is changing the dynamics of the mining industry dramatically, because all of a sudden these guys are getting, 30% more for each ounce of gold that they're selling. That means their cash flow is going through the roof, and their earnings are spectacular. And for at least the well-run companies in the mining space, this is a very good time in which they're making lots of money, and then they are deciding what to do with all that money. And in the subcategory of miners, which is the royalty streaming companies, something really interesting is happening, because they're kind of financiers. They cut deals in which they finance the startup of a gold mine or a silver mine, let's say. And in return for that startup capital, they get either a big cut of the proceeds of that mine, or a small cut, but significant for the financier, or they get actual gold and silver ounces sent their way. And this is they're making tons of money right now. A lot of these guys are making, $2,500 per ounce of gold that they've got coming in. So they're making lots of money, but they've been pretty conservative as a group about spending that money up until lately. And suddenly some big deals are getting done. One royalty company just bought another for $3.5 billion and then turned right around and threw another $1 billion at a single royalty stream. And that's a sign that the bigger companies in the royalty space now have so much money coming in that they're going to start putting that money to work, in part by buying each other out. So we're going to see an M&A boom in the royalty space. And that's a sign that you can hold the big guys, but you want to be buying the smaller takeover candidates in this space. And this is the kind of thing that is kind of inside baseball, but you can make a lot of money when you're in the right place and right time in this kind of a situation. And we're there now for the mining stocks. So this is the time when the gold bugs of the world who actually buy mining stocks really see a dramatic increase in their net worth. And I tell you what, it's been a long wait. It's been since 2015 since there was a really good stretch in the precious metals mining market where you can make a lot of money. And it seems like we're back there now. So yeah, I think we've waited long enough and we should be rewarded for that long wait. What the royalty and companies and streamers do, they cut deals in which they get either the proceeds, a small part of the proceeds of a mine, or they actually get the metal itself, some part of what the mine produces, at a fixed price. Usually it's, some small percentage of the spot price. So that means when the spot price of metal goes up, they've got all these deals in place that are paying them a ton of money. And that's massive financial leverage there. So that the further up gold and silver go, the more money that these guys make, only they make a bigger percentage in terms of their own previous earnings. Their earnings grow faster than the price of gold and silver. So, what's happening right now, this is earnings month for a lot of these guys. And so they're reporting all over the place, and the numbers are just phenomenal with the reporting. They're seeing record cash flow, and they're raising their dividends, and they're buying back stock, and now they're going out and buying each other. So this is it's a really fun time to be in a space like this. And you hope that you got yourself positioned previously, but if you haven't, there's still room to be buying the juniors in this space and riding them up until they get bought out. But yeah, this is, first of all, it's a lot of fun. Second of all, it's vindication, because people have waited a long time in this space for this kind of a market to really get going. And third, it's fascinating from a theoretical standpoint, because we're kind of towards the end of the fiat money, fiat currency experiment. And we're headed for the final crisis, the crack-up boom, whatever you want to call it, and then the monetary reset. And the absolute best place to be positioned in that 3 or 4 or 5 year stretch that we're heading into is mining stocks, because they are the guys with the leverage who make out when you've got kind of a financial crisis that sends the currency down and precious metals up. So it's just nice to be here finally. It was a very long, hard wait. But as is normal in life, things take a lot longer than you hope they will and you expect they will. But the right things do eventually happen.
John Rubino highlights growing institutional mistrust as a key market driver, pointing to recent reports of potentially harmful fungicidal coatings on organic apples linked to Bill Gates' investments. These concerns, regardless of their validity, reflect broader skepticism about traditional oversight institutions and consumer protection systems. Rubino connects this decline in trust to a significant shift in wealth migration away from currency-based assets toward tangible resources. As confidence in conventional systems erodes, investors are increasingly favoring inflation-resistant commodities such as gold, silver, farmland, oil, and uranium, driving bull markets while accelerating the shift away from cash and traditional financial instruments. instruments. The timing of this trend coincides with an unexpected acceleration in the adoption of digital payment systems. Data from Clearly Payments indicates that 84% of transactions in the United States are now conducted digitally in 2025, representing a dramatic transformation in payment behavior. Tech.co financial experts are examining both benefits and drawbacks as businesses prepare for this transition using mobile point-of-sale systems. The convergence creates a paradoxical financial landscape where technological digitization advances alongside growing demand for physical assets. As payment systems become increasingly electronic, segments of the population simultaneously seek security in hard commodities, reflecting deeper concerns about the stability of the financial system. Rubino's analysis suggests that this dynamic may produce a bifurcated system, combining digital payment efficiency with expanding physical wealth preservation markets, thereby illustrating the complex relationship between technological progress and evolving institutional trust. Let's get back to the interview.
In a crisis, you tend to see these things like wage and price controls and capital controls where they won't let you move your money, or banking bail-ins, which is something that they've been talking about for a while, where if your bank gets in trouble, the government doesn't bail the bank out. It takes your deposit and uses that to bail the bank out. But remember back in 2022, that's when we had the big burst of inflation, right? That's when inflation was like 8.7% officially and much higher in reality. Then the politicians started talking about price gouging. And the most popular part of Kamala Harris's platform in the last election was she was going to crack down on price gougers. Now, that is the early phase of the marketing for price controls. When they say, oh, there's these specific people who are out there and they have market pricing power and they're raising prices and they're the ones who are making your life so hard. Well, we're going to crack down on them and we're going to fine them, or we're going to limit the price that they're allowed to charge. And so it comes in the back of corrupt governments tell to ignorant people about how they're trying to help them. And then people who aren't, who don't have a sense of financial history or anything and don't know that that stuff has been tried 100 times and never worked. And they buy it. And so you can be a kind of a popular politician running on a platform of price controls, and that's why it actually gets enacted once in a while. But here's why it doesn't work. Because a thing, whatever you buy, isn't just a single thing. It's actually a whole bunch of things combined to make a product. And I think in the article that you referenced, the example I used was a tonsillectomy, which they still apparently do. I was using it as some example from the distant past, but apparently that's still in operation. But a tonsillectomy isn't a single thing. It's, how many nights you're going to stay in your hospital room and what kind of anesthesia you're going to use and how many nurses are going to be on call in case anything happens, and a bunch of other things. Many, many things go into this procedure, which a hospital then prices. Well, if the government comes out and says, well, from now on, tonsillectomies are $15,000 max. Well, the hospital is faced with rising costs in that kind of an environment for all its inputs. So it looks at that tonsillectomy and goes, okay, well, we'll cut out one of the nurses, we'll use the cheaper anesthesia, and we'll kick the patient out a day early from the hospital room, and we'll do a bunch of other things that save us money. And that dramatically impairs the experience and maybe the safety of the patient who gets that tonsillectomy. So now spread that out across an entire economy and you get an economy that doesn't work anymore, where nothing is as good as it used to be. And you called that shrinkflation, and that's kind of what it is. It's the quality and quantity that you get diminishing, even though maybe the packaging is the same. They call it the same thing. They charge you the same amount, but what you get is dramatically less good than what you used to get. And so once you have a whole society where that kind of a dynamic is in place, life gets harder. People get more unhappy. There's civil unrest. There's massive mistrust. And that's kind of where we are right now, right? We've seen trust in the system diminish for various reasons. I mean, the pandemic was one big part of it. The Ukraine war was another. Inflation was another. It goes on and on. Oh, the fact that they ran a dementia patient for president and lied about it. Different people got lied about or figured out they were being lied to about different things, because very few people are paying attention to the whole spectrum of stuff the government's doing. But all you need to know is that you've been lied to one time, and then you don't trust the establishment anymore. And so everybody in the U.S. has been lied to at least one time that they know of. So this thing called the trust horizon is shrinking dramatically. It used to be that we trusted the World Health Organization and the United Nations and the State Department and the military and the public health authorities. We trusted them to take care of us. Now, most people don't trust any of those guys anymore. The big media outlets now, with the exception of Fox, that's the only one that's still holding up. But all the rest of big media is just imploding. CNN and MSNBC, they're being sold off for scraps, and they're just going to cease to exist, very possibly, in the near future. And the reason for that is that they've been establishment mouthpieces for the past decade. They've been lying or just reading the script the CIA or whoever handed them. And now we can all kind of know that. They've lied about so many things that, like I said, everybody knows they've been lied to at least once about one of those things, and nobody trusts them anymore. So yeah, that it's possible that the biggest institution in this conversation is the monetary authorities, because they're running the currency. And if we don't trust anybody anymore, obviously that includes the Federal Reserve. We don't trust them to maintain the value of the dollar. And people they're not watching CNN anymore. They're not watching MSNBC. They're refusing to take vaccines, and they don't want to hold the currency as much as they used to. So that cash under their mattress, they're spending on real stuff. The bond funds that they used to own, they're dumping, and they're switching to tech stocks, unfortunately, and gold miners if they're smart. But it's a process now in the financial markets of money moving out of financial assets and into real things. So the price of farmland is up, and you've seen Bill Gates, which is another reason not to trust him. He's buying more farmland than any other individual has ever owned. What's he going to do with that? It won't be something good, I don't think. So yeah, we're seeing a system in which people give up on the authorities that they used to trust and are looking elsewhere, probably much closer to home. For speaking of Bill Gates and a lack of trust, did you see the story about the new coating that he is responsible for, that they're allowed to put on organic apples? Now, you go to Costco or someplace, you buy organic apples, and they're going to have this coating that is a fungicide and maybe carcinogenic on those apples. But somehow, some way, Bill Gates was able to wrangle a designation of organic still. And that's in the press now. People are starting to see it. And I think that just reinforces at this point the mistrust that people have for the big establishment entities, and anyhow, it leads back to the financial crisis that's coming, because if people don't trust the currency, they tend to swap out of it as soon as they get some currency, and they buy real stuff. So gold, silver, farmland, oil wells, uranium mines, all of these things that governments can't just create more out of thin air, those things are going up, and they're going up dramatically. So we're seeing bull markets in the commodity space now. And a big part of that is that we just don't trust our bond funds and our bank stocks and our cash anymore. We got to do something with it. So we're looking at things that governments cannot inflate away.
The Council's annual central bank survey reveals that 95% of reserve managers anticipate an increase in global central bank gold holdings over the next 12 months, underscoring the metal's growing role as a core component of monetary reserves. Interest in gold has been particularly pronounced in recent years, with momentum accelerating after inflation surged to its highest level in decades in June 2022. Bolstered by rising prices, persistent global demand, and declining trust in conventional financial assets, gold's rally has cemented its position as one of the most resilient and reliable safe haven assets available. Central banks are steadily expanding their holdings to strengthen reserve security, while individual investors continue to view gold as a hedge against systemic risks. In an environment marked by economic uncertainty, geopolitical tensions, and a decline in confidence in fiat currencies, gold remains a timeless store of value and a cornerstone of long-term wealth preservation strategies. Stay tuned for more data-driven insights into the evolving financial landscape. If you appreciate grounded, fact-based analysis. Be sure to like and subscribe to stay updated with our weekly reports. Thank you for your continued support. Enjoy the video.